For our farm and ranch community, access to capital remains a tough situation. I'm Clark Alexander. I'm sitting here with Gary Pierce. We're with Pure Funding. We're going to talk about our farm and ranch land loans, hobby farm loans, and we're going to get started right now. How we doing, Gary?
Doing good, doing good. Ready to talk about some farm and ranch?
Yeah, so I think the number one question I get when, we're out meeting with either the realtor community or potential customers is farm and ranch. What does that mean? Like, what does that mean that you guys do? So
right.
I think for our followers, it would probably good to set a baseline of what farm and ranch lending really means. And then we could talk a little bit about what each product offers. What are some of the limits? Like, how big are we talking about here? Who can we service? So when we say we help farm and ranch customers, what does that mean in broad strokes?
Yeah, sure. So first off, you got to hit that subscribe button on the channel. Drop your comments below. If you got any questions, DM us. Love to talk to you, get a conversation going. We really appreciate it. It helps the channel.
Amen.
Let me just kind of start out with what this is. Pure funding, right? Like we could probably have a 2-hour conversation about farm and ranch lending, and what we are not is an operating loan, right? So if you're an existing ranch, an existing farm, a vineyard in California, and you need cash to get crop in the ground, out of the ground, operating cash, that's not what we do. That's going to be a different place, different entity to help you with that. The easy thing with what we do are really two different things. One is your commercial lending. So think about it from a income generating standpoint, like truly business agribusiness, commercial ag. We do that, and we can do that on the purchase, and we can do that on the refinance. And that way, that does bridge the gap a little bit on the cash flow perspective. So you can do a cash out on your property, on your business, to help with operating expenses and things like that. Growth, you're wanting to expand, bring in new equipment, bring in maybe new property to grow your business. The other side of that coin is going to be, it's going to lean more residential in nature, and it's just a hobby farm, right? So real simple, typically more acreage than your normal residency. You might have more buildings, facilities for, a horse facility, for instance. Maybe you've got a barn, maybe you got some walkers, some sheds, hay barn, things like that aren't going to be friendly from a conventional loan standpoint. And this loan will allow us to kind of facilitate that.
Got it. And then on the top end of that, on the commercial side, how large of a loan are we talking?
Yeah, so we can go to like 100 million on that one. The biggest thing that you got to remember on the commercial side is the minimum. So this isn't, hey, I want to go buy 25 acres and subdivide it into a subdivision, right?
Yep.
That's not the use for this. Number one, it's got to be highest and best use ag on the appraisal. It can be used for, a multitude of things, but the minimum threshold is $500,000 loan amount. So your property that you're purchasing has to be somewhere in the neighborhood of 7 and change, 7.25, 750, to get the down payment down, to where that makes sense. And it's loan amount, not purchase price of 500,000. So it's going to be in that 700-ish range on that. And then for that product,
typically we're looking for, on a purchase side, we're looking at around 25% down.
Yeah, roughly. Mm-hmm. Yeah. Okay. And the more leverage you get, especially on a business loan, it doesn't matter if you're a metal company, a steel company that's looking to purchase of a property. Any bank, any institution is going to look more favorable at the leverage, the higher leverage. So meaning more down payment. And I mean, just any banker, the more leverage you have, the more excited they're going to be, the more favorable the terms. And that's the same thing in the ag side. The more we get it a lot, people are like, hey, I want to put lease amount down. And I get that, things are expensive. You need cash. But it also makes the loan process, makes the loan much more favorable with the more leverage that you can put down.
Got it. And then on the smaller side, the hobby
Mm-hmm.
farm,
Yep.
what's the minimum size there?
So the as far as the land, we need 5 acres.
Okay.
Has to have some kind of agriculture use to it. So if you're running a couple cows on it, hay, bees, whatever, some sort of ag production has to
Yep.
be on that to qualify as a hobby farm. Um, what it isn't is a business, right? So it's not for that, entity that's,
Sole
a
income isn't the farm.
dairy farm, right?
Yep.
Exactly. And so that's really what it, the ideal candidate or ideal situation for that is, hey, I have a job in the city and my family has a farm and we have some cattle or we have some hay or whatever the case may be. That's going to be that person where their income isn't driven strictly off of that facility.
Got it. Got it. So I mean, here I'm in California, Gary's in Texas.
Mm-hmm.
The number one question we get is, it's typically winery in this region. I'm in Northern California. This in
Mm-hmm.
Central Valley, California,
Yeah.
grapes are
Yeah.
abundant. So what seems to be the biggest challenge is access to capital. I have this
Mm-hmm.
operating business. It's in need of growth. The tasting room needs to be expanded. I need
Mm-hmm.
to redo the road to the
Yeah.
vineyard. I need, there's new technology for grape sorting. I need access to
Yeah.
that equipment. It's extremely expensive. I'm sitting on a lot of equity in
Mm-hmm.
the business and the land and everything on the land.
Yeah.
What's the difference in kind of how lenders look at the viability of lending? And on the residential side, we talk debt to income, debt to
Yeah.
income. What's different on the ag side?
Yeah. So we're gonna look at it kind of two ways. It's a combination platter of debt to income and asset to income. So if the entity is heavy assets, kind
Hmm.
of 2-to-1 assets to the loan amount, that's a good thing, right? So if you're thinking about DTI, you want to be on the hobby farm, it's 43% max on the debt to income. On the assets, you want 2-to-1. We want to see a lot of assets, and whether that's crop in the ground, animals, livestock.
Yep.
You're looking at trailers, trucks, equipment. All those things pile up to two times the amount of the loan, and that's and it's not uncommon with these entities that we're talking to. A lot of them
Yeah.
have a lot of assets that have been paid for or are free and clear, and so that's the biggest difference. Whereas the hobby farm strictly DTI, debt to
Yeah.
income. So whatever your income is versus the amount of debt out there, whatever that percentage is, that's what we have to run with. And to qualify, you got to be below that kind of 43% range, which is pretty
Got it.
common
And
across. Sorry, it's pretty common across the board on the even like USDA, I think is 41%, if I'm thinking about that right,
okay.
um, for a residential deal. So they're usually pretty aggressive from that standpoint.
All right, so it's more asset based, and then the kind of the process, like hey, I'm interested. I'm
Hmm.
a commercial grower. What can people expect? I think anybody that thinks this is the same process as going in and you know getting a loan to purchase a home
Yeah.
is probably going to be a bit surprised. So, what expectations should people have coming into this on the larger side, on the commercial side?
Yeah. So outside of having your, banker on the street corner that you just walk into and you've had a relationship with for 30 years, it's a business loan. So it is scrutinized in that way. We're going to look at, tax returns. We're going to look at profit and loss. We're going to look at assets, right? And
Hmm.
then we're going to look at income. Like, what's the income here? Are we showing losses? Are we, there's not if there's a gray loan that we do, this is it, right? Because the underwriters have flexibility, and we've seen it before on our side where we've done a deal where the income, the W-2, or I'm sorry, the tax returns showed losses,
Hmm.
yet the asset was such a strong asset base that we were able to get the loan done because the client was so strong from an asset perspective, whether it was, equipment, cash,
Yep.
product, whatever. And so it's hard to say, here's that's why we don't publish like a checklist on the
Yeah.
website, right? Like there's not a
Yeah.
checkbox for, okay, hey, if you make these, if you hit these 6 check boxes, you're approved,
Yep.
and your money's in the mail. So it works a lot different. It is a business loan. We've done it before with this business. It's not like getting a home loan. It is definitely a much more strenuous process, I would say, in terms of a versus a home loan. And so I think it's we make it as smooth and as easy as possible, but
Yep.
depending on the complexity of the business, that's going to make it a more complex loan, right? There's more analysis that goes into it, and so it's just one of those deals.
So on the low side, we're talking 500,000, top
Yeah.
end 100 up to 100 million.
Yeah.
This is purchase, refi,
Yep.
cash out as
Hmm.
well.
Cash out. Yeah, for sure on the cash out. Like, I mean, and that's where, I started this deal off of what we're not, and we're not an operating, line, but you can use your property as that. I
Yep.
know operating lines are getting harder and harder. The cost, in the cattle market, the cost to acquire new, uh, to purchase new cattle is way higher, and so the amount of exposure is going up for these lenders that traditionally have done this. So I'm not going to be surprised to see that be pulled back a little bit in the market just because of the amount of exposure on operating lines.
Yep.
But that's TBD. Again, not our deal. But through the cash out refinance, we can use that, as long as there's enough, equity and all the
Enough
things
room.
that go with it. Yeah,
Yep.
enough room.
Enough room
Yeah.
to do a deal. Yeah. So I think, that gives you a read on size, low end, high
Hmm.
end,
Yep.
what to expect coming in the door from a process standpoint. I mean, I think
Hmm.
things like the appraisals, much more labor intensive, much
Yeah.
higher cost. It's just a bigger
Yeah.
operation.
Yeah.
You're talking about a residential loan. There's comps. There's like this house sold for this. This
Hmm.
okay. This one's in the
Yeah.
middle. Got it. It's a
Yeah.
little different here. Businesses, a row of wineries are going to be vastly different in comparison.
Hmm.
What else should people know? I guess what else should we be, should people come in prepared for when talking to us or just raising their hand saying, "Hey, I need a loan to do X." What else should they be thinking about?
Well, I think it's about telling a story, right? Like we're always telling. It doesn't matter if it's a house or a business. We're
Yep.
telling a story to the underwriter. So, as much information as we can get from the clients up front to really tell that story, and that's where it's nice where we can. It's just not this, hey Clark, your debt to income is X. That's a no go.
Yeah.
But Clark has this on his, balance sheet from an asset perspective. We can do that. So I think open-minded at the beginning. Be prepared with your documents. We work a lot of times with these business owners. We work directly with their CPAs,
Yep.
so very common. So I think just being, kind of open-minded and understanding that, this is it's almost like an interview almost, and then we got to tell a story for the underwriter. And it's just like any other deal. I always tell people all the time, they're like, I can't believe rates are this, or I can't believe they wouldn't give me a loan. And I'm like, you know are there people out on the street corner, handing out $350,000 checks with no, just
No
freely?
questions. Yeah.
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 there's going to be some questions, right?
Yeah.
And so I think that's the biggest thing, is know that we're going to be a kind of a conduit to help you get to that point of achieving your goals, right? Like, and we go back to, on the residential side, having your mortgage plan in place, whether that's, hey, I want to buy, or, I've got my home. Should I be thinking about refinancing? I want to buy an investment property. Like, how are you using your home? And you got to have a mortgage plan to do that. And then there's no difference than on the ag loan side than the residential. It's just a more complex situation. You just got to have a plan, and we can help. Any of the loan officers on the team will absolutely be involved to help with that.
Yeah, I think one thing I've learned in discussion with our lenders is it like you said, Gary, it's not cut and dry. It's not like, hey, they didn't check this box on the application, therefore they're out. There's typically questions. So, hey, tell me more about the assets they have on property. How long have they been in business?
Yeah.
It is so that, I would expect the initial conversation with us to be, hey, tell me about the business. What's the history? How did you acquire the business? How has it grown? What's your challenges? Where have you made investments in the past? Really get to understand things down to like water source. Where are you getting your water to? It's a huge question, and we need to know what is the water. It's one of the first questions the lenders are going to ask. Like, what's the water source? Especially, you're talking up here in Northern California in the wine region. It's a very important question. Do you have access to water to keep the business operating? So, it is more of an active dialogue. I would say we're probably not going to get every question answered to meet the lender's initial list of requirements, but it's part of telling the story, and they're great to go back and forth with. They've done thousands of these, so there's really not a lot of situations they haven't run into. But yeah, it's a process that's very consultative. We're going to be working with you and with the lender and trying to get that story built so the front end conversation goes smooth. We generate that interest and we start looking at real meaningful options to help you accomplish your goal.
That's a great point. So that's spot on.
Yeah, I think it's not as transactional as residential. We've got the steps, like you get through this, okay, appraisal, okay, go here. It's hey, we had a question about what they want to do here. Can you elaborate more? Do we know more details about this particular scenario? So Gary, I think this has been great. Anything else you think we should touch on that's important here that we have not addressed?
No, I think it's just an option for folks. I know financing across the ag kind of landscape is always changing. And we have products that we have, right? Again, not every lender is everything to everyone, and we're not here saying that, but we do have some really interesting options. And we also have what I think from a loan officer, loan consultant standpoint is we have the horsepower to help you build your mortgage plan around your property to make it, successful, to help, kind of free up cash. And so that's the only thing I'd kind of leave everybody with is give us a shout. Let's have a conversation and get the plan in place.
Yeah, give us a call. Let's start the conversation. I think hopefully this is helpful, kind of lays out the options on both ends, commercial and hobby farm. Again, please give us a subscribe. If you have questions, either leave them in the comments, message us on social platforms. We'd be happy to respond there or set up a time to talk. But thanks so much for taking the time, Gary. Thanks everybody for tuning in. We will continue to pump out content around this topic because it is a hot topic. It is there's a lot of challenges for farm and ranch individuals out there, so we know it's an area of need. We're going to continue to focus on it and be that advocate for you. So thanks everybody for tuning into Pure Perspectives. Gary, thanks again. Everybody have a great day, and we will see you on the next episode. Take care.
That's a wrap.